Rohr here with an early global view on Tuesday, March 17th, 2015. It is currently 7:15 a.m. U.S. Central Time, and we're coming to you a bit later than usual because we wanted to see how the markets progressed overnight on the beginning of what looks like a correction after the recent equity strength. And all we have to say about the data is, on balance, it remains weak. So what does all this mean to the markets? Well, it's been a little bit of a schizophrenic reaction. We've got the U.S. S&P 500 June contract. We've moved over to June now, of course. Hourly chart left, 30-minute chart on the right as usual. And it was a bit of bad news is good news going back to last Thursday. And then more bad news was bad news Friday. And yet still more weak news was good news, along with a lot of influence, as we'll see, out of Europe, was good news yesterday on Monday. As a matter of fact, given the importance of the lead contract, 2062 to 58 area, the fact that the June contract not only gapped up and pushed up above its own channel right around the 2060 area, but carried on the upside, was a fairly important indication. However, it's back off today by about $5, back down around the 2063.5 area. So it's going to be kind of important to see where this June contract, not only today, but in the wake of the Fed, as it's heading toward being lead contract at the end of the day Thursday, whether it sags back below 2062 to 58, or whether it heads back up to test higher resistances up on lead contract levels at 2075 to 78, or even possibly up around the old all-time high, up around 2088.70. And what's important along the way is, of course, the fact that any sagging back to this channel in this 2062 to 58 area right now, the topping line of the channel, would also probably be a determinant of whether the hourly MACD that managed to push out above its upper runaway band, whether that is ready to start cooling off and reversing back down in a way that might leave more downside potential if there is indeed a failure back below the 2058 area once again. You'll notice that the high of this rally was right around 2058 going back to Thursday. And that pretty much does it for the short-term view of the S&P 500.